Welcome to Markets Now. I'm Michelle Rook with Arlan Suderman with StoneX, and we saw mixed trade in both grain and livestock futures today. Arlan, let's start off over in the grain trade talking about the wheat market. Down day yesterday, we reversed up today. Was that all short covering, or was there a fundamental reason for the market to be higher?
I'm going to say mostly technical, but there's always some fundamental connection as well. It really goes back to what we saw on Monday, and we had kind of priced ourselves out of the Chinese market, and China has been our primary support in this market, particularly for soft red winter wheat in Chicago. And so the market broke lower, and the momentum trading algos really punished the market, really overdid it to the downside. And when we came back today and the market was unwilling to take out Monday's lows, well, then they started turning around. Now, you always kind of get some sniffing around of end user buying then again as well. But the algo's taking it to the upside, screaming the market higher. It's significant that we didn't take out Monday's lows, but neither did we take out Monday's highs in Chicago and Kansas City. It's kind of trying to establish a new trading range in here. Perhaps the bottom is in. Time will tell on that. But neither does this market ready to make a new highs either.
Yeah, and funds have covered some of that record short position that they have, but to get them to cover more, we're going to need to get above those resistance areas you just talked about, aren't we?
Yeah, let's just face it. We're still in a commodity deflation mode as far as managed money is concerned. There's not a desire. In fact, you look at the majority of commodities, they hold short positions right now. So you get a headline, and in wheat's case, it's China buying a bunch of soft red winter wheat, and it rallies while that headline lasts. And then as soon as it's gone, then the default direction is to the downside or maintain those short positions. And that's kind of what we're doing here.
Do you think we'll see more business by China, or are they done buying?
I don't think they're done buying. The question is from where. And so they're going to continue to shop where they can get it the cheapest. And for a while there, it says that U.S. soft red winter wheat was very competitive. We'll probably see some hard red winter wheat business showing up as well. But when our prices get too high, they'll simply shift to somewhere else because there are some other alternatives in the world. But I do think they will be buying more wheat.
Yeah. And did corn just follow wheat a little bit higher today? Has it been mostly playing a follower's role?
Yeah, it's kind of trapped between wheat and soybeans at this point, but wheat probably having a little bit bigger influence right now. Corn's in a sideways trading range that continues to narrow, lower highs, higher lows, really kind of tightening that spiral a little bit, suggesting maybe a bigger move down the road. Which direction is that bigger move? Probably that's going to be determined as we get into late winter and spring, as we see how the safrinha corn crop is going in the ground and what acreage is looking for like in the Midwest and what kind of weather pattern we're going to be expecting in the Midwest for the coming growing season.
Yeah. So second crop, safrinha corn, if that crop is small, that could push us out of this trading range to the top side. Also, we've been hearing rumors that China's buying. If we get confirmation of that, could that push us over those resistance areas?
Yeah, so far, China, most of what they're buying is from Ukraine, where they've been buying quite a bit of corn, as well as from Brazil, where they've been buying quite a bit of corn. We have seen some unknown destinations for corn, but mostly Mexico's been our strong customer there. Chinese demand looks to be soft, but China has also been taking advantage of this opportunity to lower prices to build some of their reserves. We've seen it with soybeans. To some extent, we expect it with corn and also with wheat.
Yeah. Soybeans had the big update yesterday, kind of pushed here, putting weather premium back in. But the Brazil weather story isn't over. And so was today just a little profit taking? I mean, did we hit some chart resistance or what?
Yeah, not enough damage evidence to suggest that we can take prices higher to ration demand. But neither is there enough comfort level with the crop there in center west Brazil to take prices lower either. So that's what has us in a sideways trading range. Talked to one of our people in that area of center west Brazil on Monday, and he says, "Oh, Arlan, it's really bad. It's really bad." And I said, "Well, how do you feel about our StoneX Brazil customer survey of 161.9 million metric tons?" And he says, "I think it's too high." I said, well, based on what you know, where would you put it? And he says, well, I'd probably put it around 158. Well, that's not enough to justify rationing demand in the US market with higher prices. As I look at the balance sheet, we probably don't need to do that unless we get somewhere around 145 to 147, which is what I told him. And he says, "Oh, that's too low. We have more, our production's higher than that." So I don't think that we'll see that kind of rationing then.
So, Arlen, do you also think that we'd have to get down to that, say, 145 to 147 to get back over that $14 mark?
From a fundamental standpoint, yes, you can always have something happen that scares the funds and they get a spike higher. But from a fundamental reason, right. Right now, as you look at Brazil soybean prices from February on, we're talking 60 cents a bushel cheaper than US soybeans. January, US soybeans are still the better buy, and about 80% of what China is buying for shipment in January is coming from the United States. But prior to that, October, November, and December, only about 50%, with the other 50% coming from South America. So we've really been falling behind in shipments. So if we get our export season extended because of a late harvest due to the adverse weather in Brazil, we're just kind of getting back to where we need to be based on how slow the shipment pace has been the last 7 weeks.
Yeah, something that we are definitely lagging behind last year on. All right, soybeans. The other factor today, Arlen, was that soybean oil pulled back here, and that was just following crude oil.
Yeah, crude oil really weighing on soy oil price. Crude oil to new 5+ month lows. Global demand is a real concern there. And the global economy, especially China, with more economic data out, negative CPI in the month of November for China. A lot of that's because of collapse in pork prices. And if pork prices are collapsing like that, we're seeing liquidation of hog herd. We're seeing liquidation of hog herd. That means less soybean demand.
Yeah. And crude oil below $70 for first time for a long time. There's talk that maybe we're going to start to see some buying for the Strategic Petroleum Reserve. Do you see that happening down at these price levels?
Well, we have seen the Biden administration do that at times at these levels, but the amounts have been very small. And this goes back to how they feel about fossil fuels. And do they really want a reserve? And I think that's a legitimate question right now because so far the purchases they have made have been more or less token purchases.
That CPI number that came out this morning, only 3.1%, and I'm sure the lower energy prices are helping or factoring in there. But this is a key here as we go into the Fed meeting tomorrow, isn't it? Or the decision tomorrow.
Yeah, it really is. But if you look at core inflation, it was up there closer to 4%, and it's not going down. And why we saw the headline number continuing trend lower is decline in energy prices. So as soon as the economy turns around, you expect those energy prices to be going back up. So what the Fed has said, to have confidence that we're going to go down to that 2% target, they need to see the core numbers go down, and especially the service sector and shelter, which is part of the service sector. We actually saw increasing inflation. Interesting note, used car prices also saw a big jump during the month. That suggests some problems in the economy, people backing off of new cars, going back to used cars.
Although there's a lot of people talking that we're not going to see the Fed raise rates, are going to pause tomorrow. Are you in that camp?
Yeah, I think they paused because there's other things doing the work for the Fed right now, but I don't see the rate cuts. And I was just on Wall Street last week, and the crowd the group think is, yeah, they're going to cut in March or May. I don't see a cut until late in the year. And if there is a cut, that means we have some significant problems in the economy. And I'm just going off based on what the Fed has said. If you take them at their word, that's the way you have to interpret it.
And that dovetails right into our discussion about cattle here. Cattle up for the third day. Do you think we are confirming a bottom in that market or not?
Well, we hope so. I don't think we have the evidence to support that yet. But we do look for steady cash this week, and that should support the board a little bit. As we look at what the USDA has done in recent WASDE reports, they've added about 1.6 billion pounds of beef production to the 2024 balance sheet because how we pulled cattle forward, and we're selling record weights, carcass weights right now. That's only down about 3% from this year. And when you look at how we've rationed export demand with the strong dollar and with our high prices, and we've encouraged strong imports. Imports have really skyrocketed. We have adequate beef supplies, and we've seen some rationing of demand, especially the lower ends. Now, maybe that's because of the imports from Australia, lower quality beef coming in for hamburger, etc. What's going to happen to the middle cuts, which have been holding pretty well once we get past the holiday? That's going to be one of the keys to determine if we put the bottom in yet or not.
All right. Pleasure as always, Arlan Suderman with StoneX, and that is Markets Now.